Hello again, fellow BeachBum traders. Thank you for joining us for part 2 of our weekly trading game plan for the trading week of November 6th through November 10th, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, how to manage our shopping list. We'll also talk about dividend payers and various option strategies to generate additional income as you wait for your top swing trading stocks to set up, those swing trades to manifest themselves. So let's get started. Welcome, Brian Moritz. Thank you for joining us. Glad to see you today. So here's our Google document with our notes for part 2 of our weekly trading game plan for November 6th through November 10th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to these notes in the description box below. If you have not already seen part 1 of our weekly trading game plan for this week, titled Make Money Trading in November, we would highly recommend that you also view part 1, as that contains our market analysis, our trade ideas, strategies, etc., and provides us the input for selecting our top swing trading stocks to watch for this week. We keep all of our Google documents with our notes from our weekly trading game plans also in a publicly accessible Google Drive folder, so you can refer back to the notes for part 1 as well as previous weekly trading game plans, and you can find a direct link to that Google Drive folder also in the description box below. Welcome, Walter Lyons, MD, Easy Mike. Thank you all for joining us today. Hope you all are doing well. So firstly, we'll quickly review our trades for this week, and then we'll look at the charts of these trades in Webull. We went long on the ETF on WEAT, W-E-A-T. This, again, is an ETF long on WEAT. Yesterday, we saw that it looked like WEAT had swung back up. We've been talking about this for some period of time. We've been watching for this bottom and swing back up in WEAT. So we went long on WEAT again on the 1st at 5685. Got a little bit of a price improvement on that for another scalp or swing trade in WEAT. So again, we'll be following that trend and scalping WEAT or swinging WEAT as long as it will go up. Good morning to Ricky Khan. Thank you for joining us. Just a quick reminder, if you'd like to get real-time notifications when we enter or exit a trade, you can get email notifications as well as in our Discord, and we'll show you that in a moment as well by joining any level of our Patreon. And you can find links here in the notes as well as in the description box below. Also, we have a couple channels that are available if you join any level of our Patreon. The first is the Thinkorswim Price Alerts channel. I have price alerts set up in Thinkorswim. When those get triggered, they get automatically posted in this Thinkorswim channel. So we can see recently MP broke below its 52-week low, and that got posted. If we happen to follow up one of these Thinkorswim alerts with an actual trade, then we would reply to that Thinkorswim price alert in that channel. If it's a trade not directly related to a Thinkorswim price alert, like our trade in WEAT, then I would post that directly in the trade alerts channel. So again, although I don't recommend you blindly follow us or anyone else into or out of a trade, if it would help you make money trading, help you succeed in your trading career, to see when we're entering and exiting trades, then again, you get that information by joining any level of our Patreon. So we'll quickly look at the WEAT trade in the online browser version of Webull. So you can see right after the Fed interest rate decision to hold real estate, we saw yesterday a number of sectors took off, real estate being one of them. Again, we've been talking about this rotation into real estate. Also, again, we've been watching several of these REITs. We went long O last week, land last week, and this week we're swinging WEAT. So again, you can see we got in right on that bottom on the 1st, and then Thursday, Friday, wheat started to take off. So you can see I'm manually moving my stop up below support levels, and I'll trail that again, manually trailing that with a stop to maximize our potential profit for this scalper swing trade in wheat. Welcome, John, Gerald Fitz, Flip of the Shippa, Ellen Krantz. Thank you all for joining us. Glad to see you today. So now we'll look at our top swing trading stocks to watch list. I'll quickly review and discuss some of our watch list updates for this week, and then we'll go also look at some charts. Also, I want to talk about the pair that we have currently in our top swing trading stocks to watch list. Let me grab a quick drink, and we'll get started with our top swing trading stocks to watch list. Okay, we've had SATS, which is EchoStar Corporation, in our watch list for several weeks. It's been bouncing around. Again, we've been keeping an eye on seeing where it's going to find a bottom, where it's going to swing back up. If you'd like to hear our previous due diligence and some of the reasons we like EchoStar in general, you can view the previous video where we've done some due diligence on EchoStar, some of the things we like about it. We're going to look at, they announced a merger with Dish Networks back in July, around July 5th. And I want to look at those charts for Dish and SATS. I think there might be a potential merger arbitrage type opportunity. Dish also popped up when I was looking at puts. We'll look at our puts ROIC Google Sheet towards the end of this session. And Dish popped up, and so I wanted to take a look and see if there was an opportunity to possibly sell puts on that. And I saw, again, this potential what I think might be a merger acquisition type of arbitrage type of deal. So I'm going to jump over to the SATS FinBiz profile. Again, you can click on those links in our notes, and you can see, SATS had been coming down. It bounced, with that exuberant run after the Fed interest rate decision. So we didn't really want to chase it there. You can see it broke down a little bit below 14, touched that lower trend line in the 13s, and then bounced pretty exuberantly, broke above its moving average. What I wanted to look at is this when they announced their merger, and you can go down in the news in either the SATS or the Dish news feed in FinBiz and find the merger announcement where they're talking about that. It says, I believe, that Dish is going to own about 69% of the combined company, which is something I wanted to take into consideration. So you see, after they announced this merger, SATS had a nice run. They had positive earnings, but then it declined, probably a guidance issue. And then it bottomed, recently, right before the Fed interest rate decision. So they're profitable. Again, number of reasons. They have very little debt. Then I want to also look at Dish. So here's the profile for Dish Network. You can see it's very similar. See the bounce that it had was much smaller. It's got some resistance at the moving average. Can also see that the price of Dish is much less. So a couple ways we can play this merger, either with SATS or with Dish. It doesn't look like Dish jumped up quite as exuberantly as did SATS, so it might be better opportunity to buy Dish. And again, the Dish shareholders are apparently going to own like 69% of the combined company. You can see after the merger was announced, it did run up, hit that resistance, and they had earnings. It looks like a positive surprise. But again, overall guidance and market sentiment through September and October was generally negative. So again, it looks like, we've got a bottom and a swing back up in both Dish and SATS. So again, you could probably choose either one of these two. Again, Dish is much lower price than SATS, about half the price, less than half the price, and it does not look like it's reacting quite as dramatically to the recent exuberance. One of the things I don't like about Dish in general is their high debt. So if this merger does not go through, holding Dish might be less attractive than holding SATS. So we're going to keep an eye on both of these, and again, you can choose whichever one you prefer, think is a better deal given this potential merger. Welcome, Mad Max Beyond Thunderbone. Glad to see you in the live chat again today. So we can also look at those charts in Webull. We look at our real-time watch list in Webull. Again, you see that dramatic run up in Dish just recently after the Fed interest rate decision. You can see it's got a peak up in the 8s. So again, almost a 2-to-1. If we get a little bit of a pullback back to that 460 level, that might be attractive. Again, we've been watching SATS for a while. Again, it bottomed at 1321, ran up pretty quickly. So, anywhere around 1360 or below is attractive. And you can see it ran up very quickly after that Fed interest rate decision. So again, might be a little bit of an arbitrage opportunity with Dish versus SATS. And again, whichever one you find more attractive. I don't like really the business model in general of Dish Networks. I think they missed opportunities years ago, and I could talk about that in more detail at some point. So I like the combined company. I think there's opportunities with that, and when they close the merger, that might provide a pop in both of them. And again, I believe if you own Dish, you'll get a certain number of shares of the combined company. I think it's 69%. It's like 0.72 of an EchoStar share, and you can read that in the news as well. Just a quick reminder as well is if you would like to get more frequent updates to our watch list, including price targets, dividend information, optionality information, we have a automatically generated web page that is available to our Patreons at any level of our Patreon, and that gets updated at the end of each day. So any changes we make during the week or even during the day will show up in the automatically generated web page at the end of the day. And then if I make any updates after that web page has been generated, we have a channel in our Discord titled Stocks Watchlist Updates, and that's available for any level of our Patreon as well. So again, if I make a subsequent update to our watch list, I'll post that in the Stocks Watchlist channel in our Discord. So if again that would help you further getting price target information, etc., you can get access to that web page and that channel in our Discord by joining any level of our Patreon. Again, we're taking WEAT out of our watch list as we're already long WEAT. Again, as we saw in the futures, it hasn't run too much. So on a little bit of a pullback, there might be still an opportunity to go long WEAT. Welcome, Sydney Osborne. Thank you for joining us. Glad to see you here in the chat as well. Okay, next we'll talk about our bullpen stocks. If you're new to our channel or community, the concept of the bullpen stocks are stocks that we're not really watching real time, although I will draw some exceptions at this time. Some we're actually kind of keeping an eye on in more real time, but generally they're ones that look like they're going to present an attractive swing trading setup in the near future, and we revisit them at the end of each day. If the setups improve, we put them in the game, move them up to our real-time top swing trading stocks to watch list. If they break down or run away, then we just take them out of the bullpen, and we can always revisit them again later. So I want to take a little bit more detailed list on one that we're adding for this week. CPSH, CPS Technologies Corporation. It's electronic components company. So let me grab, this is kind of an unknown, under the radar electronic components company that popped up in one of our queries that we run at the end of each day. So I want to take a little bit of a more detailed look at this one in FinViz and in ChartMill. Let me grab a quick drink and we'll look at CPSH. Okay, so let's first look at CPSH in FinViz. Probably should have left my FinViz up, but another quick note is you can find links to our trading resources, the tools we use for our market analysis, etc., in the links section on our homepage, beachbumtrading.com, bum without the U. So there's my link to FinViz, so I can quickly access any of the tools I typically use. You can use that, look at CPSH. Again, you can see it's electronic components. You can see it's kind of broken down recently below this lower trend line. If we look at a little bit of a longer view, you can see in the past it's been much higher. So recent high about 585 or so. It's down about 261. So, you know, essentially a penny stock. Again, in the past, we can see it's been much higher. The things I like is they're profitable. It is optionable. They have low debt. It's a very, low float, small cap stock, only 14 million shares out. The part of the decline is probably because their revenue was down, but again, they're profitable. So if we look at their financials, so we can see their total revenue is a little up, pretty flat, but a little up. Their EPS, again, for the years is positive. EBITDA is positive. So again, they have been profitable. If we look at the quarterly, again, revenue a little bit decreased. So again, part of the reason for the decline. So this might be an attractive, turnaround type play. EPS, EBITDA dropped off some. So again, potential, for a turnaround, but they are a profitable small cap. Their profile I found attractive. They provide advanced material solutions to transportation, automotive, energy, computing, internet, telecom, communications, aerospace and defense, and oil and gas. So very well diversified. Electronics seems like a positive. Metal matrix, composite components, assemblies. So again, for hybrid circuits. So again, in the electronics area, well diversified. I like that. So I also quickly looked at their profile in ChartMill to see, how healthy is the company. Again, another due diligence. You can very quickly do some quick due diligence on these companies, get a feel for, how healthy are they, and we could see their valuation is not great, but not terrible. The health of the company is positive. Their profitability isn't bad. They don't pay a dividend overall. It's, kind of in the middle. But the technical analysis rating is poor right now. So again, this is another reason we've got it in our Bullpen and not in our top swing trading stocks to watch list, is currently the technical analysis setup is not great. So we can watch using Chartmill, using Finviz, etc., using Webull. We can wait for that technical analysis set up to improve for a swing trade. We can see it's got good health and pretty good valuation. Profitability isn't terrible. They don't pay a dividend, and it's not really a growth stock. So, and you can see great health, no worries of liquidity or solvency. So again, it looks like potentially attractive swing type trade, turnaround type trade, and so we're going to put CPSH in our bullpen. If you're interested in a more detailed due diligence video, we can go in more depth, but part of what I wanted to show again today is, you can very quickly do some quick due diligence on a stock, identify whether they're profitable, whether they're financially healthy, or at risk, they're not a zombie, etc., that we'll talk about. So we'll keep an eye on CPSH, and if it does start to swing back up, start to turn around, this might be one that we find attractive. I don't believe we traded CPSH in the past, but if any of you have traded CPSH, have further knowledge, we'd love to hear your experience with CPSH, CPS Technologies as well. The others in our bullpen, I think we've had in our bullpen for a while, and we've talked about these and the reasoning in the past. So DRN is long leveraged on real estate. Again, we've been talking about that swing back up in real estate. We saw, in a number of these, we saw a pretty exuberant reaction after the Fed decided to hold interest rates steady. So right now, a lot of these have run up. As we talked yesterday, and we'll see in these charts, if we do get a little bit of a retracement correction due to the exuberant run, we might find opportunities to swing, to go long in one of these areas. Also, I'd recommend watching the sector rotations, both in the groups tab in Finviz, and also you can watch the sector pricing in the sectors sheet in our ETFs Google sheet as well. So again, we talked about real estate, so we're watching this DRN, leveraged long on real estate in general. Talked about some REITs that we like in particular. We've been watching LTC. LTC is a REIT on healthcare facilities, senior living facilities. We've been watching for a while. It didn't really come back down to our price target support level. Also, as we mentioned, we went long on Realty Income. We're long on land. We went long on those, I believe, last week. Another one we've been watching is MJ, is a trade on the cannabis sector. There's also MSOS, as we saw in our ETFs. I guess there was some news about the DEA making a purchase of cannabis to do some testing to possibly move it off the most restrictive schedule again, and that caused a little bit of a pop. So again, if we get a retracement back to that support level, we might go long on MJ, again waiting for pops on further news. We've been talking about MP Materials. MP Materials just announced their earnings. It wasn't great. They cited lower rare earth prices as a headwind. It might be an opportunity as like China is restricting exports of certain rare earth elements, MP, and having rare earth elements in mining and processing in the U.S. viewed as a strategic resource. You can also hear our previous due diligence on MP via the link to our due diligence video in the description box below. We also have been talking about the seasonal upswing, historical seasonal upswing in retail. The ETF we like to use for swinging retail long is RETL. You can also see in our ETF Google sheet, we've got ONLN, and CLIX, CLIX, which are more online retail focused. You'll see this also has run. We also talked about, small caps and the seasonal swing in small caps. So we've been watching TNA, and you'll see they had an exuberant reaction as well. So again, use IWM to identify the bottom entry points for TNA. Use XRT to identify the supports in retail. I'm going to take UTSL. Again, another seasonal trend that we've been watching was in utilities. And we kind of missed that swing. It ran, and it doesn't look like it's going to come back down, particularly with the reduction in bond yields, interest rates, etc. So I think this run's already started in utilities, so we're not going to chase that. Again, we've got several videos you can listen to about when utilities is a good sector to buy, about their sensitivity to increasing interest rates, which again the Fed's now holding. Hopefully, some of our BeachBum traders caught some of these trends. Again, we've been talking about these trends in real estate, in retail, in small caps, and utilities for some time. So again, I hope that some in our community were able to catch these trends and profit from them. So we'll jump over to Webull and we'll look at these charts in Webull. Just a quick reminder, if you're not already using Webull, right now they're offering at least up to 6 free stocks if you open and fund an account in Webull. They continue to offer 5% interest on uninvested cash in your cash account. You can see we use Webull for our market analysis, our due diligence, the majority of our trading. So if you're not already using Webull, we recommend we use the platform. And if you'd use our affiliate link in the description box below, you can get your free stocks as well as help support our BeachBum Trading YouTube channel or our BeachBum Trading community, which we greatly appreciate. I'm using the online browser version of Webull right now. You can see another nice features. You can have all kinds of different watch lists. So I just, at the end of each day, I just flip over to our Bullpen watch list. I can quickly flip through these. Again, we're going to see, a lot of these sectors we've been talking about as, possible sector rotation, long swings into the end of the year have already run up. If we do get a quick correction, a retracement due to the exuberant run we saw after the Fed interest rate decision, there might still be some opportunities for us to get into some of these sectors and, again, ride that historical seasonal swing upward into the end of the year. So here's DRN on retail. Again, we saw, exuberant run up recently. Here's LTC. Again, this is a REIT on senior living, healthcare facilities. The REITs have really run up again after that interest rate decision, after the mortgage rates or the interest rates decline dramatically after the Fed interest rate decision. Here's again MJ, which is on cannabis. Again, we had a couple, possible legislative actions. It's caused a bounce. If we can, get a little bit of a pullback into that 264 area, or on that pivot point 284, I think is the other good support level. Again, this would be a longer term swing. You can see, cannabis tends to bottom at the end of the year and then run up to the early into the next year. Again, MP Materials. Again, it looks like it bottomed. They announced, some headwinds to rare earth pricing. Again, I think if we get more restrictions out of China, etc., we'll see, more of an upswing. And they did, again, bounce after that Fed interest rate decision. So a little bit of a pullback. It looks like it pulled back a little bit on Friday. If we can get some stable support there in that 1550 area, then we'll probably finally take the long in MP. It was just breaking down and making new lows, and so that's what we're watching. Is it making new lows, lower highs? And if so, we'll let it keep declining. Once it stabilizes, then we'll swing MP. And yes, as Easy Mike points out, we've talked about MJ, and we talked about this last week as well, as the new Speaker of the House is pretty much against general legalization. Although again, there is a push to lower the schedule, and that was part of. And then also the DEA is looking at testing and making some decisions about lowering the schedule. So those are possible positive catalysts. RETL is again on retail, so we see that exuberant run. We're not going to chase that, but if we get another pullback into this support area, we might still get a chance going into Black Friday, end of November. If it's going to run, most people are aware of that seasonal trend, positive for retail, and so again, we're not going to chase that if it's going to continue to run. And again, XRT I've got here so I can see, looking for support bottom in XRT to decide on the bottom support for RETL. And again, we see that, just dramatic, exuberant run right after the Fed interest rate decision. And again, small caps very similarly. So we saw after the Fed decision, exuberant run up. If we get a pullback back to the support level, this is on IWM. So watch IWM for that bottom support level. Again, TNA is a leveraged long on small caps. We've seen the sentiment right now is positive. We've talked about several headwinds for small caps. The interest rates are high. They're going to stay high if these have high debt, etc. Watch out. And we'll also talk about tax loss selling into the end of the year, but we've got about a month before we have to really worry about that significantly. So we might continue to see a run in small caps for the near term. Again, if we do get a pullback, that might be an opportunity if you're day trading, scalping, etc. The inverse of TNA is TZA. I believe the Crow pointed that out again last week. So again, short-term scalping, day trading, small caps may be very profitable on a pullback retracement with TZA, and then longing with TNA. So I hope that all helps. See you guys talking about the dollar. Yeah, I got several news items that the dollar ratio for against the pound, against the yen, we're dropping dramatically. So as we talked about yesterday, if we get that decline in DXY and the dollar weakening in the dollar, that'll be a positive tailwind for dollar denominated commodities like gold, silver, oil, etc. And along those lines, I wanted to introduce a new category. I'm calling it honorable mention stocks. If somebody has a better idea for what to call this category of stocks, please let me know. But essentially, these are stocks that I'm not going to put on our watch list or in our bullpen, just in terms of what we have in our portfolios, etc. But there's some that might be of interest to you. And so I wanted to point those out, and maybe in the future we can actually even point out some day trade or short-term trade opportunities that I see, even though our trading style is very much longer-term swing trades. So this week I had several that popped up in the category of like gold, silver miners, etc. One that I thought you might find interesting is this SAND, S-A-N-D. The reason I'm not interested in gold and silver miners is because we have quite a few gold and silver miners already in our portfolio. So I'm not really interested in adding more individual stocks, gold and silver miners. We also have large positions in GLDI, SLVO. So I think we've got plenty concentration in gold and silver. But if you're looking for individuals, gold, silver miners, I thought this SAND might be interesting, so I wanted to take a quick look at that one for you. So this is Sandstorm Gold Limited. It's a gold miner in Canada. You see it's a NYSE stock. The first thing I look at is, are they profitable? And they are. They have, significant income, significant profit. Their debt is not excessive. A lot of the miners, have high debt. It's very capital intensive to mine. This is optionable. It's got a positive recommendation. It's a sizable cap stock, 1.45 billion market cap. This guy popped up as a positive risk reward opportunity. So right now you see it popped up recently up to 488. But if we zoom out a bit, it's got, upside up into the, sixes. And then longer term, if we look back, it's into the nines. So, potential of a 2-to-1. Again, it looks like, there's some reasonable support in this 4 area. So, and a top again up into the potential 10s. So if, gold continues to go up, test its previous highs, nice risk reward profile on SAND. If I look at their financials, again, it's a Canadian stock, so, we're going to have some limits on what we can see in terms of their financials, but EBITDA looks growing and positive, EPS is growing and positive. Again, revenue, growing. It looks like their recent EBITDA was good. EPS, I'm not sure what the last decline is. So again, potential, if we get a pullback in the SAND down to that, 440-ish level, down to 4. So potentially a nice individual stock, a nice profitable gold miner that you might find interesting. So again, Easy Mike saying, went long GDXJ, which again is one of the ETFs on miners. Another one is JNUG, JNUG. So again, if you're looking for ETFs, those would be the preferable ETFs for gold, silver miners. If you're looking for some individual stocks, again, I thought SAND might be an interesting individual gold miner stock. Looks like they have gold, other purchase agreements, royalties. Again, royalties are kind of attractive. Looks like mostly gold. So again, let me know if this type of thing, if you would like me to mention some additional stocks that you might find interesting, even for potential day trades, short-term trades. And we can point those out. And again, if you have a better idea for that category, please let me know. In terms of shopping list stocks, again, as we always recommend, have your shopping list ready. If we do get that correction, that pullback, what stocks do you want to pick up? Again, my opinion. Again, we're not financial advisors. This is not financial advice. All of our content's for education and entertainment purposes only. But again, we think the trend, at least till the next Fed interest rate, the macro trend till the next Fed interest rate decision is going to be up. We would not be surprised to get some corrections, some retracements, particularly due to the exuberant run we had after the last Fed meeting. So if we do get a retracement, quick correction, have your shopping list ready. What do you want to pick up? Again, we just recommend, stay away from zombie stocks, zombie companies, zombie ETFs. And if you'd like to know more about, what those are, you can hear more about those categories via the links to the videos in our notes and also on our BeachBum Trading YouTube channel. So I hope that helps. Okay, now we're going to talk about dividend payers. Let me grab a quick drink. I'll bring up our dividend payers Google sheet. So if anyone has in the chat has a dividend payer that you'd like to take a look at, we can do that. If I missed your ticker previously, I apologize, and please throw it back up, and we'll try to take a look at any dividend payers that you might be interested in our dividend payers Google sheet. Just a quick reminder, if you'd like to have 24/7 access to this Google sheet containing our information on dividend payers, again, this is what you can use to construct your own calendar of dividend income, be it weekly, monthly, etc., with the profile, the risk reward profile, dividend payment profile that you would like. You can gain access, 24/7 access to all of our Google Sheets, including our dividend payers, ETFs, puts, ROIC, by joining our Patreon at the All Access or VIP level. I'm just checking the chat to see if anybody put any tickers that I missed. Again, if I missed it so far, please throw it back up there. Otherwise, I'll spin through some of the ones we've talked about. So again, DRN does pay a small quarterly dividend, but not significant. Again, that's one we would look at for dividend for price appreciation. Ford showing up as positive. I'm not terribly interested in buying shares of Ford. We talked about that, and we've talked about those a little bit, GM and Ford, in our looking at puts in the past. Talked about CLIP in the past. Here's LTC. So it looks like it went ex-dividend on 10/20, so around 11/20 will probably be the next ex-dividend date. We were watching NSA. NSA had a significant bounce. That's on public storage. PSA bounce, so it kind of bounced pretty dramatically. So we're not watching that at this time. Again, realty income. You saw hopefully some of our BeachBum traders were able to catch that dip. Those cheap shares of which has now bounced back up. Now it's back over 50, but there was an opportunity to get some really cheap shares in realty income when they announced a large merger. Again, now it seems to be uptrending. We were long before that merger was announced, rode it through the dip. So now our position is profitable again, and we've got stops in place to protect that profit. SAR, I know Easy Mike likes SAR, an asset manager, so you can see its dividend profile. The other ones I wanted to talk about are TLT. Again, we saw that, dramatic, exuberant run in TLT after the interest rate decision. So you can now look at TLT and TLTW. And if you'd like to go long TLT, we're long TMF already. I don't think we're going to add to our treasury exposure at this time. I think the swing is probably already occurring, but you can see, TLTW pays a little bit more of a dividend, higher yield. Again, this is a relatively new ETF doing covered calls on TLT. So again, you can make a decision, look at the risk reward profile of those two ETFs and pick the one that's, the short-term risk rewards pretty much the same, 52 weeks, pretty much the same. But again, right now, TLTW is appearing to be a little more attractive. Again, it's relatively new, so I don't have a historical experience with how this is going to perform and whether it's going to decay over time due to that covered call strategy. So just be aware. So again, by using this Google Sheet, you can find, various dividend payers that fit the type of dividend you're looking for, whether it be monthly, quarterly, when do they last go ex-dividend or projected to go ex-dividend, when's their payment date. Again, you can see their current risk reward profiles, what industry they're in, whether it's optionable. So could you also sell covered calls against a position, generate additional dividends essentially for yourself. Some people have been talking about these yield max dividend payers that have been coming out. We did do a whole video a while back on the yield max ETFs that were out at the time. You can find those, our analysis, our research on those yield max dividend payers in the ad sheet. So there's Amazon Y, Google Y, GOOY, Netflix, NFL Y, NVIDIA, etc. So if you want to see the risk reward profile for those currently, you can find some of that information in the ad sheet. Again, these are relatively new. So again, I'd like to see a little bit more of a history to them to see how they perform. I have been looking at this APLY, given the decline in Apple after their declining sales growth, guidance, etc. So you can see it pays pretty nice yield. Now, is that sustainable? Is that going to perform? But if you want to hold it for a short period of time on the decline in Apple, that might be something that is attractive. Again, as these others announce earnings, we talked about the NVIDIA earnings coming up in the near future. So if you're interested in NVDY, again, you can see their dividend information in the ad sheet of our dividend payers Google Sheet. So I'll leave this up in case somebody else has another dividend payer you want to look at. In case I missed it, again, I apologize if I missed your ticker, but we can come back and look at others as well. I see people are mentioning T-bills. So one of the ETFs that you can play T-bills with is this bill. See, it pays pretty decent monthly dividend, 41 cents a month. It doesn't have, it essentially goes up and down as the ex-dividend dates hit. So not a whole lot of price appreciation. You have to kind of buy it at the bottom, sell it at the top, or just hold it and ride the longer term trend. But again, the yield's okay. It's I'd like to see over 5% to beat money markets, etc. But and again, if you'd like us to do further research on any additional dividend payers, you can please let us know, put it in the comments to this video. You can also always contact us in our Discord or via any of our social media sites. Again, you can find links to all of our social media sites on our homepage, beachbumtrading.com, bum without the U. And again, if you'd like to see additional dividend payers, have us do the research, potentially add it to our dividend payers Google sheet. Just let us know, and we'll see what we can do. We also have a whole series of videos on how to use this dividend payers Google sheet to construct your own schedule of dividend payers, and you can access that series via the link in our notes. You can also find it on our BeachBum Trading YouTube channel, a whole series on how to find the best dividend paying stocks, and we'll add to that series as appropriate. So next we'll talk about some of our option strategies, which are again additional ways that you can use options to essentially generate your own self-generated dividends. So we'll talk about a couple of our strategies we utilize in that fashion. Grab a quick drink and we'll talk about that. Okay, we essentially use two dividends or two option strategies to, again, generate additional income. That's selling covered calls against our existing positions, buying them back when they go down. So sell when it goes up, buy it back when it goes down. We also look at potentially selling puts when a stock's going down, buy it back when it's going up. However, we have a series of criteria of stocks that we're willing to sell puts against. Again, ours are cash secured puts in general. Again, I'll open up our puts ROIC Google sheet, which is what we use to help identify opportunities to potentially sell puts. And again, you can get access to this Google sheet as well. Use it to identify opportunities to sell puts by joining our Patreon at the All Access or VIP level. Go through this very quickly because I want to get to some of the questions that have been asked, but I did add a number of stocks options to the research sheet to see if those might be attractive for potentially selling puts. So I've got Trade Desk at the 50 strike, Mosaic at the 30 strike, Dollar Tree and Dollar General both showed up as potential opportunities at the 100 strike for each of those. So I plugged those into the research sheet to see what the option pricing is. So what I can do is put them in the research sheet, and then we run automated systems, collect their options data. You can see that data shows up in the gray columns, and then we can see, what's the ROIC on these various stocks. Now, what we're going to see in this Google sheet in general is, since everything pretty much ran up on Friday, so red says it's running up, green says it's coming down. So if it's green, it's an opportunity to sell cash secured puts, sell puts. If it's red and you've already sold, opportunity to buy it back. And then we could see what the ROICs are. Pretty much nothing is attractive. So we had things running up, the VIX going down dramatically. So the options premium got pretty much crushed on Friday. So there's very little that's showing very attractive. See Albemarle bounce back up above that. I lowered that strike price to 120. Still not a whole lot of ROIC there. And again, right now, nothing is terribly attractive. You can see, the fair values on some of the ones we've added. Dollar General, Dollar Tree, Dexcom bounced back up. I lowered the strikes on some of these, like Estee Lauder, etc., Ford. So again, you can use this puts ROIC sheet during the trading week. The options data gets updated by our automated systems at the end of each day. The white columns are Google Finance functions, so those will update in near real time, about a 20-minute delay. And again, you can see who's moving up, who's moving down, do further due diligence to see if it's an opportunity to sell puts. So again, if we get a correction, a pullback, if the VIX bounces up, some of these might become more attractive. But right now, I don't see a whole lot of opportunities there right now. Again, we've got a whole series of videos on option strategies for beginners. Talks about, how did we put this puts ROIC Google Sheet together? How can you use it to sell puts, buy them back, generate your own dividends? And we also have a whole playlist of videos on how to use options, how to make money trading options, so how to sell covered calls, etc., and E-Trade, Webull, etc. And you can access that in the options playlist on our YouTube channel. Okay. Again, I wanted to answer some of the questions that have been asked the past week. So let me grab a quick drink. And Rainy Bose asked, how does, essentially Pepsi stack up against Coke, KO? And he put that in the comments. So we recently released a quick take due diligence video on Pepsi. So he's asking, how does Coke compare to or stack up to Pepsi? So since we've already talked about Pepsi, I wanted to do a little bit of quick due diligence on Coke, and then we can talk about how those compare. Okay, so we'll look at Coke and Finviz in a second. So let me point out that I did some comparison. I put Coke in the ad sheet and a comparison between Pepsi and Coke in the ad sheet of our dividend payers Google Sheet. So we'll take a look at that. So if you scroll down, you can see I've got, here's Coke, here's Pepsi. So we can see they both pay a quarterly dividend. You see Coke pays 46 cents. You see what the nominal yield of both is about 3%. So, not above the 5% threshold, but Pepsi has a little bit more potential price appreciation. So it's got an adjusted yield about 18. Coke's about 14, 16. You can see the level of stability. So they both have a 52-week range that's about the same. Pepsi has a little bit of a top to bottom range that's a little bit better. And again, right now, in terms of being close to a support level, Pepsi's a little bit more attractive. So depending on what you're looking for in terms of buying Coke versus Pepsi, if you're looking for a stability, Coke might be a little bit better. Although again, the adjusted price yield is not as attractive. If you're looking for that potential price appreciation, again, Pepsi might be a little bit better. So again, you can find this information in the ad sheet on our dividend payers Google Sheet. If we look at the chart of Coke, again, it's had a nice bounce. You see, it's kind of cyclical, so it's it's a consumer defensive. So when the market goes defensive, they tend to run to consumer defensives. Again, Warren Buffett has a large stake in Coke, had it for a long time, generates a lot of dividends. So again, another potential reason, if you're looking for stability, Coke might be a little bit more stable. Again, very profitable. Again, you'd want to catch the dips. The long-term trend is up. So if you're willing to hold, for a very long term, it looks like, pretty slow growth, but generally up. It does have these dips, so you would have to, be willing to hold through these dips. Another, how does Coke stack up versus Pepsi? comment that I'd like to make is I think Pepsi has, it's more diversified into snacks, cookies. They've got Frito-Lay, etc. I think Coke is more focused on just, their beverages. So again, Pepsi has a little more diversification. And that could be an opportunity now with the dietary drugs, etc. I think they got hit a little bit harder as being a snack food company than did Coke. But again, both of them have a lot of sugar, so they probably both took a negative hit due to that dietary drugs. So I hope that helps our Harnivos. So if I didn't answer your question, please let me know if you'd like more information about Coke versus Pepsi. I don't drink either one of them. I'm a coffee drinker, so and again, some reasons you might prefer one versus another. Okay, we also had a question from Sydney Osborne. I think I saw Sydney in the chat earlier. He was talking about AGRO, and he and EKS were also talking about LND. So very quickly, I will try to take a look at those. So here's AGRO. We can see it's a farm products company out of Luxembourg. See, it's a consumer defensive. Let me look at their profile. See agricultural, ag industry, crops, rice, dairy, etc. They're, pretty good size, 1.2 billion. Looks like they're, got good profit, good sales. Some significant debts, optionable, quite a few shares. The one thing I commented to Sydney previously was right now, it looks like it's a little bit high. You could see, it's dipped down to that support level, but it previously peaked out around 12, only got upside in the 14s, 13, 14. So I'm not terribly interested in AGRO right now for the reason that it's, kind of high right now. If we see, history, it's cyclical. So again, another consumer defensive, it's a farm product. And again, it's, relatively high. So the risk reward profile, it would seem that like there's more risk to the downside than the reward to the upside. So they do pay a 5.7% dividend. So again, if you're looking for the dividend, again, it's kind of high. If you wait for it to come back down, that dividend yield will go up, and you'll get a better value. So again, I'm not interested in AGRO at this time. If it does come down, to a support level, that might be more interesting. The other thing I wanted to comment in general about farm products, agricultural inputs, etc., is we're going into the winter. In my humble opinion, I would expect once we get into spring that would be a more positive season for agricultural inputs, and we can see these at least this year. Once we got to March, April, it trended up. If we look at previous ones, February into April, trended up. So I think this is a seasonal downturn for farm products and agricultural inputs. So again, I'm not terribly interested right now in farm products or agricultural inputs, unless it's something like, we saw the futures of wheat bottomed out and it looks like they're swinging back up. And that's how we play that one. They also talked about LND, so we'll take a very quick look and then I'll wrap up. I know we're running a little long today. So again, another farm products, consumer defensive in Brazil. So again, my comments about the seasonal trends of farm products, I'm not really interested in that category in general. We do see that it recently bounced off that lower trend line, bounced up pretty nicely. Again, profitable company, got a decent market cap, not a lot of debt, pays 12% dividend, so that dividend's pretty attractive. We zoom out a bit, it's not as expensive as AGRO. Looks like it may have bottomed a recent bottom, got potential upside to 10, so this is a little bit more attractive. But again, the seasonal trend, I would expect, we might get a seasonal bottom. You can see, it looks like this bottoms in the summer, in April, in the summer. So maybe this one might be more attractive. Again, be aware of some of the political issues going on in Brazil. I'm not in touch with most of that right now. But again, if you wanted to collect that 12% dividend, LND looks a little bit more attractive than AGRO at this time. So, and again, it looks like it's coming down to a possible long-term support level. So again, L&D might be more attractive if you really want to play farm products. If you know what's going on in Brazil, that might be more attractive again for a longer-term swing, and you can collect the dividend while you're waiting for that to swing back up. So you'd have to be willing to hold it through that down cycle, swing back up, and just collect the dividend while you're waiting. So I hope that answers those questions, and I hope that helps. Again, we'll wrap up. If I missed your ticker, your question, I apologize. We've covered a lot of material today. You can put it in the comments to this video. You can always contact us in our Discord. Again, you can find an invite to our Discord. Our Discord's free to join. We can continue these conversations 24/7 in our Discord. You can also find an invite to our Discord and our other social media profiles and communities in the link section of our homepage. So again, plenty of ways you can contact us, ask us any further questions. If you have other stocks you'd like us to take a look at, we can try to do that. And as always, we'd love your help. We hope you'll smash the like button on this video. That helps us grow the community by getting the YouTube algorithm to share it with more traders around the world. We hope you'll share this with your fellow traders around the world. Let's continue to grow our community. You can see we've got a great group in our chat, helping each other out, sharing trade ideas. And it's great to see everybody helping. And again, we'd love your feedback as to what can we do to add more value for all of our BeachBum trading community. So please let us know. And otherwise, we hope you found this valuable. We hope it all helps. And we hope you have a great trading week, November 6th through 11/10. And we'll be back next weekend for our next weekly trading game plan. Again, typically 10 a.m. Saturdays and Sundays, part 1 on Saturdays, part 2 on Sundays. So we hope to see you all again next weekend. Thank you again for your participation and support, and have a great day.